Chapter 1. Whenever you see that first pattern on the chart, a restlessness awakens inside you. Is this the pattern? Is this the opportunity I've been waiting for months? Or is this just another deception that will push me back to where I started? In the world of trading, patterns are not just a formation of a few lines. They are a reflection of our hopes, our defeats, our hard work, and our nature. Whatever pattern you see on the screen is an expression of the inner struggle within your mind. And the first chapter of this book highlights this very point. You can't understand the pattern until you understand yourself. The author says that a chart pattern is not just a visual representation of data, it is the essence of human behavior. When a head and shoulders pattern forms, it's not based on a company's news, but on people's fear and greed. Chapter 1 begins with the frightening truth that most traders want to see patterns, but they don't learn how to live them. They want every breakout to give them a profit, every support to lift them up, every candle to give them a signal of where to go. But have you ever asked yourself, am I flowing with the pattern or swimming against it? In this chapter, the author shatters the profound misconception that by looking at patterns, you can be 100% correct. No. Patterns don't give any guarantees. They only open a window of possibility. When you see a double bottom, the question isn't whether it will go up. The question is, can I manage that uncertainty? Which you can see as uncertainty, not as a promise. Many times traders get so excited that they start seeing patterns forcefully. They look for breakouts, triangles, or bull flags where there is nothing. The author calls this seeing magical ghosts on the chart, where our desires speak louder than the chart, and that's when we make mistakes. This chapter teaches us that before looking at every pattern, you have to quiet the noise inside you, because only when your mind is calm can you see the chart clearly. The real chart of trading is not outside somewhere. It resides within you. Chapter 1 also says that a good trader doesn't just look at how a pattern looks, but also understands what kind of emotion is working behind that pattern. When a triangle is contracting, a war is going on between fear and hope. When a breakout happens, it's the result of the patience of hundreds of people. And when it fails, the death of hope is also attached to it. The author says a trader is not someone who can catch a breakout. A trader is someone who can smile even if the breakout fails. This chapter, going beyond the definition of chart patterns, teaches us how we can create a system that includes not only the patterns, but also our decision-making process, because how you see a pattern is more important than just seeing it. He knows that the market will give opportunities every day, but I can't be correct every day. This is the biggest gift of this chapter. Trading doesn't start with skill, it starts with prudence. Every pattern is incomplete until you read it with the right mindset and the right strategy. So next time you look at a chart, before looking at the pattern, ask yourself, am I ready? Do I understand the story behind this pattern? Am I as prepared to lose as I am to win? Because the real trader is not one who catches every pattern, but one who learns from every pattern. Chapter 2. Have you ever seen a pattern suddenly stop while forming, as if a story was left incomplete? A triangle that breaks before a breakout. A double top that pretends to go up and then suddenly slips. Why does this happen? Because charts don't always show you the truth. They show you what you want to see. In the second chapter, the author pulls back the curtain on this misconception. Many times, patterns don't succeed because people always rely on speculation, not reality, and the market punishes that speculation. This chapter begins with a hard truth, that no matter how many books you read, no matter how many hundreds of patterns you memorize, you can't become a real trader until you understand the pulse of the patterns. The author calls this the follies of patterns. It is that moment when you realize that this is not just a chart, it is the collective belief of a group of people, and sometimes that belief can also be broken.
Chapter 2 states that behind every pattern, four forces are at work: hope, fear, greed, and illusion. When you start to understand these four forces, a pattern becomes not a sketch, but a story. For example, a rising wedge looks like the stock is going up, but inside, the volume slowly decreases. People think it will give a breakout, but in reality, the weakness has started from within. The author says here, does it have strength? Does it have conviction? Is the volume supporting it? Or is everyone just trading in the shadow of an illusion? In this chapter, we are taught how to test the strength of a pattern, not just by its shape, but by its structure, its supports, and its resistance, and even more by time. The author says, the same pattern forming in the morning has one meaning, and the same pattern forming in the afternoon has another. This is because the mood of the market changes every hour, and a good trader is one who can adapt their thoughts to that mood. The author says a very profound thing. Patterns are not signals, they are whispers. They are trying to tell you something, but are you listening? Or are you just in a hurry to look and jump? Another thing taught in this chapter, which very few people understand, is that the failure of a pattern is also a signal. Many times when a breakout fails, a big movement is signaled from there because hope has been broken, and no bigger trade comes from broken hope. The author calls this the power of failure. You may have heard, don't fight the trend, but he says, don't fight the failure either. When a pattern fails, a new wave is born, a new force, which is often more powerful than the previous one. This chapter also explains how you can identify false breakouts, and most importantly, how to profit from them.
Have you ever seen that when a stock breaks a support, people panic and sell, and then it quickly goes up? This is a stop hunt, the market's most silent, yet most dangerous move. The author tells us, you will not be smart, you will be silent. The message of Chapter 2 is very clear. If you continue to consider every pattern a signal, the market will repeatedly deceive you. But if you consider every pattern a conversation, then one day you will begin to understand that language, which is not just of numbers, but of human behavior. And on that day, you will start reading yourself before the pattern. Chapter 3. You open the chart, your eyes quickly scan the screen. Any signal? Any breakout? Any move that will set you apart from the crowd. But the real question is, are you really looking at the chart, or is it looking at you? The third chapter takes us to a level where understanding the recurring nature of a pattern is more important than its formation. This chapter states that history repeats itself, but not exactly. It repeats in the form of emotions. The author says, patterns are not printed on paper, they are printed in minds. Every time a double top is formed, it's a reflection of some previous failure. Every time a flag or pennant is formed, it repeats an old story of excitement and doubt. But can we really read those memories? In this chapter, the author takes us deep into pattern reliability. It is not enough to just know what a pattern is. The question is, how many times has it been true? In what circumstances has it worked correctly? And when did it just become an illusion? The author talks about data here, the analysis of hundreds of charts. What percentage of breakouts went up? How many times did the pattern fail? And was there still a profit even after the failure? Here it becomes very clear every pattern has a statistical soul that tells you how much a pattern can be trusted. But the author warns, don't marry a pattern, measure it. This is where the biggest mistake of a trader comes to light. When he profits from a pattern once or twice, he starts to believe in it and tries to repeat the same thing every time. But the language of the market is not constant. The success of every pattern depends on the market sentiment. The author teaches us things like failure rate, breakout direction, and average price move. But he doesn't present these calculations in a mindless technical language. Instead, he presents them in a practical context. For example, a descending triangle often breaks downwards, but when the market is in a bullish sentiment, the same pattern turns into a trap. People short and the market pulls them up. So the question here is, can you be a slave to the numbers, or should you believe more in your experience, your practice, and your live observation? The author says, statistics tell you the likelihood, not the outcome, and that's where the thinking of a true professional begins.
This chapter also explains why volume confirmation is important. Just the formation of a pattern is not enough. That pattern should have strength. Volume is that strength. If a breakout does not come with volume, it's just noise, not a signal. And here the author shares one more important thing. Great trades are not made by great patterns. They are made by great discipline. Many times we see a pattern, all the data also supports it, but we hurry, we jump in a rush, or we are so scared that we don't execute even after the signal comes. This is where the author gives an emotional warning that patterns are just tools. Your mind is what drives them. If it is not calm, you can lose in any pattern. The summary of this chapter is limited to one line. A pattern without discipline is a pattern for disaster. Because he knows that the market will give opportunities every day, but I can't be correct every day. This is the biggest gift of this chapter. Trading doesn't start with skill, it starts with prudence. Every pattern is incomplete until you read it with the right mindset and the right strategy. So next time you look at a chart, before looking at the pattern, ask yourself, am I ready? Do I understand the story behind this pattern? Am I as prepared to lose as I am to win? Because the real trader is not one who catches every pattern, but one who learns from every pattern.
Chapter 4. You took a trade. Everything seemed fine, but just then the market reversed and your conviction was broken again. But was it the market's fault? Did the pattern deceive you? Or did you give more weight to your hopes than the information? The 4th chapter uncovers this very common but extremely dangerous enemy bias. It is that mental filter that makes you see the chart the way you want to see it, not as it actually is. The author says, a belief accumulated without review becomes the root cause of downfall. When you've seen a pattern repeatedly, when you've made a big profit on this type of chart before, then next time you can't stop yourself, even if some small signals tell you that this time something is wrong. The author calls this selective vision, where you don't want to see the things that go against your beliefs. You don't see the volume decreasing. You ignore the RSI divergence. You only think in the direction you like. Because the human mind is not afraid of loss. It is afraid of its own thoughts being proven wrong. And this fear pushes us towards loss again and again. In this chapter, the author suggests an extremely important exercise. Before entering a trade, write one reason it could fail. Think about how powerful this is. You are not just challenging your own logic, but also teaching yourself a mental balance that every pattern is a possibility, not a guarantee. In this chapter, the author divides bias into 3 parts: confirmation bias, recency bias, and anchoring bias. All 3 of them silently destroy your trading decisions. Confirmation bias, when you only look for the thing on the chart that supports your mental belief. Recency bias, when you start giving more importance to a recent event and forget that every situation is new. Anchoring bias, when you hold on to an old level as if that is the only truth. Not being able to recognize these 3 is the biggest reason for a trader's downfall. The author says a profound thing here. Bias is not a weakness, it is human. But trading is not forgiving to humans who ignore it.
In this chapter, we are taught how a successful trader puts every one of their thoughts to the test. They don't just look at the chart, they journal their decisions, do post-trade visualization, and review their thoughts from time to time. Because in the end, whether a pattern works or not, your purpose is not just to earn money. Your purpose is to make yourself a better trader. And that will only happen when you recognize your biases, write them down, and ask yourself one question before every decision. Am I really looking at the chart or just the echoes of my own mind? The climax of this chapter comes when the author introduces us to a bitter truth, that you can memorize all the patterns in the world, but if your thinking is wrong, the charts will also punish you. The true knowledge of trading is not just in strategy, but in the courage to look within yourself, to challenge your perspective every day, and to accept the truth every time, even if it is against your hopes. So next time you open a chart, First, open your mind, because until the mind is clear, the patterns will remain blurry. Chapter 5. Have you ever seen yourself losing on the same pattern repeatedly? The same setup, the same signal, the same hope, and the same result, loss. Then the question arises, is the problem with the pattern or with our repetitive habits? The 5th chapter explores this labyrinth where we look for the success of patterns but ignore the failure of our own behavior. The author says a revolutionary thing in this chapter. The pattern doesn't fail, your action fails the pattern. Every time you trade in a hurry, every time you enter without a stop loss, every time you try to cover a loss with an immediate revenge trade, you are creating a new pattern, a pattern of your own self-destruction. In this chapter, the focus is on patterns of human behavior rather than chart patterns. He shows us a mirror of how every trader gets stuck in a repetitive loop inside themselves. The author says, before reading every pattern, you should read your own previous behavior. Before every trade, you should see where you made a mistake last time. Was it a hurry? Was it overconfidence? Or was it just the fear that this opportunity would pass? Because until we analyze our own trading history, we will keep repeating ourselves.
In this chapter, the author makes us understand the depth of trade journaling. It's not just about writing that the entry was here, the exit was here, but also documenting what was going on in your mind before the entry. What were the fears? What were the hopes? What was the logic? Because a trade is not just a technical thing, it is an emotional process. And every loss and every win has a mental shadow attached to it, which will keep repeating until we understand it. A very profound concept comes in this chapter, behavioral charting, which means just as you track price moves on the chart, you should also track the moves of your own behavior. For example, how many times did you immediately trade again after a loss? Where did your emotions take you? Because that chart is not outside, it resides within you. The author says in this chapter, self-awareness is the most underrated indicator in trading. And this is the most difficult thing, to see yourself and tell the truth. How many people lose every day and yet don't change their habits? Why? Because changing is not just technical, it is like emotional mourning. You have to mourn the death of your old thoughts. You have to let go of the comfort that wrong habits provide. The author says in a very emotional line, most traders don't lose to the market. They lose to the version of themselves they refuse to upgrade. And that is the summary of Chapter 5. Charts change, the market changes, but if you don't change, no pattern, no strategy, no coaching, no guru can save you. So next time you look at a chart, be sure to ask yourself one question. Am I the same trader I was yesterday? If yes, then you will probably get the same result today as well. But if not, a new journey begins from here, where the pattern changes not only outside, but inside as well.
Chapter 6. The Invisible Battle. Has it ever happened that everything was in your favor, the right pattern, the right volume, the right trend, yet you didn't take the trade? Or you took the trade, and at that very moment, doubt surrounded you. Maybe I shouldn't have taken it now. Maybe this is a fake out. And then you started fighting with your own thoughts. Chapter 6 takes us inside that invisible war, which isn't on the screen, but between the mind and the mouse. The author talks about decision paralysis, overthinking, and mental fatigue, those mental states that secretly hollow out every trader from within without any warning, without any noise. This chapter begins with a bitter truth. When you check every chart 3 times, scan every time frame again and again, and try to catch the micro movement of every candle, you are not just gathering information, you are exhausting your brain's bandwidth, and this mental exhaustion slowly erases the clarity of your decisions. The author says, waiting for perfection kills the trade that could have been perfect for you. In this chapter, the author explains a crucial principle, the cognitive load theory, which means that when the brain is burdened with a lot of information at once, its decision-making ability decreases. Now think about your charts with RSI, MACD, moving averages, Fibonacci, volume, trend lines, news alerts.
The brain has to process something every second. Is there any clarity left in this? The author leads us to a very practical solution, the simplicity ritual. At the beginning of each day, look at the chart in its most basic form. Only price, trend, and volume. No indicators, no noise. Because until the mind is empty, decisions will be heavy.
Another profound idea comes up in this chapter: mental recovery cycles. Every professional athlete has a recovery routine, but a trader? A trader fights every day with the market, with their fears, with their greed, but never rests. And a tired warrior does not win on the battlefield. The author teaches us how taking breaks, disconnecting, and talking to yourself should be a part of trading, not a fault. This line is dedicated to every trader who stays glued to the trading screen all day and keeps themselves in hustle mode, but is breaking down from within. A small but powerful exercise is mentioned in this chapter, the 3-breath rule. Before every entry, take 3 deep breaths, feel your body, and remind your mind, I have come to trade, not to react. Because when you are calm, you will hear the signal, and it won't be a reaction, but a test of mental stability. The chart gives you signals, but are you in a position to hear them? Because a tired mind considers even the fastest pattern to be noise. So the next time you open a chart, first, clear the screen of your mind. Maybe that's where the real movement will begin. Chapter 7. The most expensive indicator is impatience. Sometimes the biggest strategy is the one that is not seen. No breakout, no pattern, just a standstill, a calm environment, like the silence before a storm. And this is where a trader's biggest test happens. Can you still have patience when nothing is happening? Chapter 7 talks about a power that the market never headlines, about which no YouTube videos are made, for which no red indicator gives an alert, and that is patience. The author says impatience is the most expensive indicator, and it is true. How many times have we taken unnecessary trades out of boredom? How many times have we told ourselves, come on, let's just do a small scalp, and that scalp became a big wound? In this chapter, the author takes us to that void of trading where nothing is happening on the screen and our mind starts getting messed up. Do something. Why so much waiting? Maybe the movement is about to come now? But have you ever noticed, when is the real money made in the market? When you are calm and when you have control over yourself. When you do not trade and then wait for that one opportunity that makes all the wrong trades meaningless. The author coins a term in this chapter, strategic inactivity, which means intentionally doing nothing. This is not a weakness, but the greatest strength, because it only comes when you conquer emotional greed. In this chapter, an old but powerful proverb is repeated: money is made in the sitting, not in the trading. But can everyone sit? No, because sitting or doing nothing means getting out of your control freak mentality. We have taught ourselves to catch every movement, trade every breakout, and seize every opportunity. But the market has no hurry for you. The author gives a perfect example here that a trader should be like a farmer. A farmer does not cultivate the land every day. He waits according to the season, sows the seeds at the right time, and the rest of the time he just watches. Your chart is also like a field. It cannot give a crop every day. But can you watch? Can you wait? In this chapter, the focus is also on the confluence of time frames. Many times the pattern is correct, but the timing is wrong. Why? Because you expect an hour's hope on a 1-minute chart or are looking for a day's profit from an hourly pattern. The author says your patience must match your pattern's nature. Don't just look at the breakout, see when it will happen. Another extraordinary concept comes up in this chapter: energy preservation. Every trade, whether you win or lose, takes away your mental energy. And if you trade every movement, you are slowly eating away at your inner clarity. And when the real opportunity comes, you will be tired, bored, and empty of confidence. So, the author says, patience is not passive, it is powerful. The trader who can wait stands apart from the crowd that jumps on every candle. This chapter takes an emotional turn when the author reminds us that not trading every time is also a decision. And sometimes that decision saves the most. So the next time nothing is happening, ask yourself, Am I ready to wait? Can I bear that silence where everyone is restless? Can I wait for that one trade that will give my whole trading a new shape? Because the real game is not in how much you played. The real game is when you played.
Chapter 8. The Pressure of Profits and the Danger of Overconfidence. Have you ever felt fear after winning? A great trade, everything was perfect, the price went in your favor, the profit kept increasing, but as the profit increased, a new fear started rising silently. What if it reverses now? I have gained so much, what if it all goes away? Chapter 8 talks about this unknown fear, profit pressure. The author reminds us that just as it is difficult to bear losses, managing profits is also an art. Many traders lose not from a loss, but from panicking after a win because they get scared seeing their profits. Fear that what will happen if it goes away now? The author says traders get scared seeing profits, and from here starts the habit of booking profits too early, narrowing the stop loss, or exiting suddenly. A crucial principle is explained in this chapter, profit protection bias. This is that mental trap where you make every decision to hold on to a win that takes you away from it. It sounds contradictory. We decide with fear, not with logic. The author says here, a winning trade is like holding fire. It gives you warmth, but also threatens to burn. So what is the remedy? The most powerful part of this chapter is where the author teaches us that the clarity of exiting a trade is more important than entering it. You must know in advance where to book profits, where to keep a trailing stop, and when to go break even. Because the situation in the market changes every second, and if you are there without a plan, your fear will make your decisions. The author suggests a simple but deep exercise, reverse scenario thinking. After every trade, ask yourself, if this trade had gone wrong, would I not have cut it so early? If the answer is no, then you have probably booked profits too early. Similarly, overconfidence is also dangerous. A few wins create the illusion of invincibility. You start thinking that now every trade is your friend. You start forcing trades, playing with the market, and the market, it just gives you a single jerk and swallows all your wins. So the author repeatedly says, winning is not a reason to stop thinking, but it is an even bigger reason to become more disciplined. The most emotional thing in this chapter comes when the author says, some of your best trades won't feel good while holding them, but they will define you. Because the trade that scares you, but still you trust your system, that is your real victory. So the next time you see a profit, don't panic, don't hurry, don't let fear speak, but just ask yourself one question. Am I ready to live this win in its full form? Because just taking a trade is not enough. Nurturing the trade is also a skill.
Chapter 9. False Breakouts and the Traps of the Mind. Sometimes the market creates such beautiful patterns that everything seems like a film. The preparation for a breakout, the jump in volume, and the expectations of traders. But as soon as you enter, the market starts moving in the opposite direction, and you think, how did this happen? It was such a perfect setup. Chapter 9 talks about that biggest deception, false breakouts. That moment when everything looks right, but still everything goes wrong. That moment where the chart deceives you, shows you a fake breakout, makes you stand with the crowd, and then crushes the crowd. The author says, this is the cunningness of the market. This is a trap where new traders get stuck most quickly. The author states a very important truth here. A breakout is not real just because it happened. It's real because it was confirmed. Confirmation means the price stabilizing after the breakout, volume supporting it, and moving in a new direction after a retest. Many traders don't see this because they get carried away by emotion. They are not seeing an opportunity, they are seeing the impatience to fulfill their hopes. In this chapter, the author teaches a great and practical method. Is the breakout not just your imagination? Are volume, RSI, and other factors supporting it? Has such behavior been seen in the previous patterns as well? This rule is like a filter that stops your inner haste and tests the breakout, not just sees it. The most important part of this chapter is where the author says that not taking a trade is also a decision. But can we stop? Can we stop our mouse when the market explodes upwards and we feel, if I don't do it now, the opportunity will be lost? The author says, the breakout you missed today saves you from the breakdown you regret tomorrow. Another important thing in this chapter is the introduction of trade zones. The author says that there are some areas on the chart where breakouts repeatedly fail because many retail traders place orders there. The big players know this. They create breakouts there, attract people, and then reverse the market. So it is important that you do not see every breakout as a sacred signal. See it as a story. Does the story really seem true? Does the story match the previous data? And if not, then stopping is also a decision. The author says here, your job is not to chase movement. Your job is to catch clarity.